All right, so this is a review for a trade on NQ that um, um, that is today, and I just want to do a video review of it really quick because there's a lot of nuances to this trade, and that it's not gonna. I'm not. I mean, I'm gonna try to hit most of them on a written review, but I kind of want to go over it verbally to articulate things. So, as if I were explaining it to somebody else. So, the I guess let's first go with context, right? So this is, um, I mean, we're gonna go, I guess, first of all with the broader context, right? Which is in the midst of, um, the situation with the Strait of Hormuz and everything. We've had, I mean, if we go to CL, we've had, this thing in the past days reclaim this basically the 97 area where that have that anchor VWAP and then went, back up into it literally touched 111 and then um we had that catalyst come out yesterday or the day before yesterday that was like pretty huge. I can't even remember what it was, but it was, it was um um I pointed to I remember. So basically Iran saying that it's willing to put on, the nuclear stuff on the table, which is no, that's not the point. That no, the U.S. said that it was willing to, um, in order to come to a deal right now, to address the nuclear stuff later, which was a hard red line, and basically the whole reason why the U.S. is going to war with Iran. So that's a major sign that the U.S. desperately wants a deal. So I think that was, interpreted. So we had this huge, I mean, oil still here hovering above 100, and then bam, we had a huge drop here into basically below 90, actually to 88. So that's, 1,200 ticks there. So, and then we have a V-shaped bounce. And why am I getting so much into oil? I don't know. So, literally, I don't know. So, basically, we've had volatility here in oil. Um, on the upside and the downside, depending on the headlines. But NQ does not give a shit about headlines, and the positive headlines like that one gap it up. But even when NQ gaps down and then fades the headline and then starts retracing that move back in, like back to where it was trading before. NQ doesn't do that. AMQ has just basically been on a melt up, um, for the past, um, many days. So, um, and what we've had, um, especially at the open, is just it's basically a gamma squeeze. So it's pure positive gamma, and it's just traps and then melt up and trap and new highs and new highs and new highs. It's just and basically untradeable, and the tape like not much in terms of dynamic range and not doing what it's supposed to do and so forth. So that's been the character of NQ all this time. And we are in a positive gamma environment. So going into that, that was the first thing that I had in mind was we are in a positive gamma environment. However, we did, this is already I don't know how many days of just melt up and squeezing up, and then today, sorry, yesterday we had the typical again, same thing at the open, sort of like s- some sort of consolidation here. We were looking at, double top here, and we were looking some sort of, it was showing some weakness, so we were, it would be reasonable for this to be fading, and then it ends up trapping, and then another squeeze up higher. But then we get, for the first time in a while, after the open, we get, we get exhaustion up here, and then we get a pretty sharp reversal down here. So today in the pre-market, we are basically again same, just like really difficult to trade. I did not attempt to trade this at all in the pre-market, but this was like like a melt up, basically higher, higher highs, higher, higher highs, along this trend line, a very tight um, trend there, and then we get the data, the non-farm payrolls data at 8:30, and it gives us this little move up here, 100 points up here into the 28,970, I guess, I think, and it exhausts into that, and that's basically in line with the highs of the previous day, and it's like it, and just look at this, right? So this is like a, like a very solid trend line here and a very tight trend grind up higher. Then we get that data print, and then we get like the parabolic, you know, increase in volume, parabolic action here that moves and it extends away from the trend line. Because it's a sort of like parabolic move, it gets faded and then it comes back down and it breaks below trend, and that's where we are when we right before the open. So um, we're basically breaking below the trend. So after this exhaustion here, which is basically a higher time frame double top here after this exhaustion here. It's basically a textbook double top exhaustion, and this is just it's a short. It's a short because it just is from a technical perspective. This is like it doesn't get any better than this. And so my thought, and I described this pretty clearly on the game plan before the open was this is short, right? And it's already and the level here going into the open was here, right? The 28,880s basically. It's a very pretty strong point of control there for this value area. So um and into the open, we were already like trading below it. We were trading, was dipping here into the 870s, even 860s. So that was the level. That was the level. And if it couldn't get above that level, then this would be a short. This would be a short at least into the 830s here or low 800s. Um, where VWAP was, and then well, we'd have to wait and see if it's going to take out VWAP then for it move down here into this value area. So, um, but then I wrote it clearly. I just said you have to keep in mind that we are in a positive gamma environment. We've been in a positive gamma environment for, I think, at this point, maybe about 10 days or more since that JPM, um, what do you call it? The collar, since that one expired, and then the new one was placed since that moment, 2 weeks ago or something. So, but especially in the past few days, it's been like brutally positive gamma. And um, so I thought to myself, even though this is on from the technicals perspective, like a just an A plus, A triple plus short opportunity here, this thing might there may be some shenanigans. We may see, market makers get aggressive on the bid and then push up, trap, and then squeeze. So I thought that that was a possibility. um, so that's what I'm looking at going into this trade. And now let's focus on what happened exactly. So then, and we do get the open. We hit the open, and it does. If you can see here, this is a 5-second chart, and then it does kind of like wick up here into the 880s and rejects. And it's kind of like, okay, it looks like it wasn't really dramatic, the soaking up here, but you can see the top wicks there. So it looked like it could be, it hadn't reclaimed that level yet. But the rejections here and the soaking of the tape wasn't strong enough for me to feel confident fading these little pops into that level. So we're kind of watching it. And we have here like a 20 point range here until it takes out the 28,880s, squeezes up into 900, and at that point you could tell by watching the tape that it was just taking out the highs, and this was basically trapping, and it was just going to do what we thought it was going to do, and it did exactly that. And if you can see here, and this is basically, if we go back, I don't know if we can go how far back we can go, but on a 5-second chart, if it's been for at least for the past 3 days, the open has been exactly the same, where we get these like massive squeezes right at the open. We can't go that far. Um, where it just doesn't look back, and and it trades off of the 9 EMA on the 5-second chart because it just goes straight up. If you see this on a 1-minute chart, it's just, there's not one red candle in sight. It's just like, look at this, bam. Like once it takes out here, if this is 1 minute, yeah, 1 minute takes out here the highs, then it's just a gap, and it just green candles all the way up into the 980. So and not anywhere close to the 90 MA on the 1 minute. So you have to look at it on a 5-second chart, and it's pretty much trading at least here, kind of trading off of the 90 MA. So on the 5 second. So um, this was like this is not this trade, but it's just an aside here where um, I could have traded, for example, this dip here into the 25,900 area after it took out the highs here. And this happened really quickly for an entry off of the 90 MA on the 5-second, and then ride this and trail it into the 30s, and I think even the 40s. So um, even though this happened quickly, and this was not the dynamic range on the tape here wasn't super great. So this is more like trading off of the technicals on the chart. This is just not organic. It's never been. This is um, just just you know just inorganic, crazy, muddy tape action, and they're just like driving it up. So that's not organic at all. But then we get here into the highs that we put in on this gap after the the non-farm payrolls print, and this is where we're okay, so this could be a double top. So we already had, again, on a higher time frame, we had the double top right here, and it happened actually the pre-market with that employment print. But then, you know, here we can maybe we get the gap here, and then we get the local lower time frame double top here for then a fade and then a break of trend and then all that that we were expecting it to happen. So if we're thinking about that, um, this could be exhaustion here after this. And again, this is like an opening drive, massive, totally inorganic gap up, manipulated squeeze up. So um, sometimes you think, okay, when that happens and they basically gapping it up into a level like this could be just that double top. So that's what I am focused on here. So we have a VPOC here. I mean, we have several, it's not like a strong profile, um, but we do have a level here in the 960s, and we have another here 950, and then we have down here, right below 940s. So um, when we're coming up into that level, then the 960 area really, really stands out. And we have this other, again, 950 here, and then we have same thing, right? And and we're expecting here, and then we're seeing some exhaustion signs here. This red candle here, obviously, and we have that VPOC in the 960s. But it's not. It's the VPOC in the 960s, but then we have a pretty, you know, it's the whole area between the 50 and 60, and even a little bit below 50. This whole value area here, um, and that VPOC is not really that strong. So, but the whole area is. Um, so we have that VPOC there, and we think that, okay, if this is exhausting here at that double top, um, and we're getting this first red candle here, which is breaking trend, and we can actually draw a trend line here because it was a pretty tight on the way up, and then bam, it breaks trend there, right? So, um, and we're working again with that VPOC there in the 960s. And what happens is, it kind of straddles that VPOC and it breaks below it, but 950 is still an important area. And if you see this on the 5 second, um, which one? This is a 5 second. Um, I guess on a more local basis, you're going to see that 950 area, 950 level. Well, I can't remember. Whatever. It was 950 on the geese on the tape. It was important. So, you know, and it's a half number. So even if it breaks here below VWAP, VPOC, if it holds here is 950 and it keeps bouncing up, so that's um, that's still, possibility that this is has already exhausted here and we're gonna get a move to the downside. But then we get this dip here. It's trading somewhere. It pops here above, or kind of like exhaust here into the 960s, and then comes down, and then we get this flush here, and this wick here in the 940s. This is the clearest up to this point is the moment where that dynamic range kind of like really like all the mud kind of like dissipated and it was really really clear and easy to read and a really really strong dynamic range expansion here on the tape and we could see just like the clean acceleration here on the tape, the very obvious um, soaking here, absorption, and the bounce. So, and we have a VPOC here, and we're creating some structure around that VPOC. But it is this soaking up here in the 40s and the bounce where it tells us, okay, this is where it's trapping. And and that was the ideal entry. And if you, I actually missed that entry because it was now trading below that VPOC, and I was actually shorting off of that VPOC, and it worked. It played out. Um, and I did that a couple of times before it actually reclaimed. And then I missed the entry for a reclaim here because I was not anticipating. So if I had what I should have done, and when I saw so and it's not that I'm seeing this in hindsight. I thought about it at the moment when it was happening, but I was just didn't act on it. But I knew that the soaking here, when it dipped here into the 40s and then came quickly back up above 50s, and then create some structure here against the VPOC, it was clear as day that this was already trapping. Um, because after this, you would expect this to then give, just basically that backside to continue to the downside, but it's being interrupted here, saved with that soaking. Look at the volume here. And so at this point, it's clear that it's going to squeeze. So I missed this entry, and this was a perfect opportunity to. This is the way I tag this would be a scalp inside a structure. So we have this structure being created around this VPOC, and you are basically, scalping the bottom of this range, positioning yourself for the break. So this is that typical trade that you're getting before it breaks out. And if you do get this entry here, you're obviously then taking off some here into that level in case it actually doesn't take it out. But holding a core for the break. And then this is the first leg of the trade when it actually reclaims that VPOC and then bam, squeezes up here into the 80s, 90s, whatever. Um, but this is sort of like again, the scalping inside structure phase of the trade. And this is already when it's confirmed, when it creates structure here and it doesn't, um, and above the highs that it's taking out. It's basically taking the highs out. And it's giving us that perfect entry here when it dips here into the 980s, which is the high here. And that's like textbook. Um, and also we had um, this VPOC here was at 99 or around 990. But then we had, if we switch to the 1 minute, I think we had um, the 90 MA on the 1 minute was right there. So it was a confluence here, like the 90 MA was just below 980, and then we have the volume profile here giving us like 983. So this dip here into the basically it was 980s. Everything was screaming that okay, 980s is your entry. So then, during this sort of like range here, when we get that move down into the low 980s, that's your entry there. And this is where I did enter well. Um, they weren't perfect entries because I got filled more like in the mid to high 980s, but still, but that was just because I wasn't fast enough with my mouse. But this was this was the entry, and because at this point it's already confirmed, all the volumes trapped. This VPOC has been reclaimed. It has squeezed up, taken out the high, then stayed up high above the level that had been taken out. And when it dips into the high here, textbook entry. So we have three things in confluence here. We have it's dipping into the high here, but also dipping into um, just above what the volume profile was showing us also that was important. And on top of that, the 90 MA on the 1 minute. So all these in confluence here. So this was just it was it. That was like it was there's no this is already This is the trade that you can size. This is the A triple plus um, leg of the trade, the one that you can just go all in because it's confirmed. This isn't quite that, but this is the, you know, you can't really size this one that much. But this is more like, okay, the tape gives you a strong signal here when you see the soaking, so that gives you conviction to put on sufficient size, but it's still not confirmed until it's reclaimed this VPOC. So, but here it's confirmed. So, um, um, I did take it off. Most of it took it off here in the 20s, and I could have easily written all my size up into the 50s and keep a core then for the rest. And instead, I took pretty much all of it here in the 20s, and I just kept like 5 contracts up here that and rode them up into the 50s. So, um, and again, with such a good setup like this, you had to let this thing squeeze, knowing all that you know, right? All the volume that's been trapped, knowing how zooming out and looking at this from on different time frames. It's an A plus setup on every single time frame. So you could have given it time to you could have just kept a core for all this thing, all this squeeze, at least up to here. Um, up to here. But I mean this and again, I mean look at it, right? So it's doing what it's been doing all these days. After that, it's just been melting up. And you know, you could be keeping a core position and capturing this. It's a different trade, obviously, but this is just a trade we're focusing on. But this is also something that you could be capitalizing on. So, um, because we're in a massive gamma squeeze. So that's basically it. That was a trade. Um, and I have the footage of the tape that I'm including on the review, but that's a separate video. I don't want to go. Maybe we can watch it actually. So, let's see. So this is right before the dip here into the 40s. There it is, bam, flush into the 40s. Look at that dynamic range expansion there on this tape. Clear, clear squeezing, soaking there. And then it pushes back up above the 50s. And like I said, I was shorting this stuff off of because I was shorting off of that 60s VPOC. Um, and it kind of played out relatively well. It was a good scalp, but that that double bottom off of the 40s could have been another. You see it here at this wick here. Another opportunity to enter off of the 40s. I should have been focused on on fading the flushes into the bottom of the range there where the tape was clearly saying that that was the bottom of the range. So, and I would be positioned there for the break. Here I'm still shorting because I haven't reclaimed that VPOC. Instead of doing that, I could be positioned here for the break with a really good entry off the 40s, and I could have scalped out around a core a couple of times before it breaks, before it reclaims that VPOC and breaks to the upside. So now we're just waiting for that to happen, which is about to happen any moment. Bam, okay, so we're getting the push there above the 60s, and it doesn't look back really in this case. Bam, it just squeezes up here into the 90s. So, bam, there it is. New highs. Exhaust there, just more exhaustion there. Bam, more exhaustion action there in the 90s. Um, That's where it's confirmed, right? So that's the first leg of the trade. I could have been positioned in the 40s. That's 50 points into the 90s. I could have captured that, and I didn't. But here, it's already confirmed. And then here is where now we're paying attention, and we've identified the 80s, the 980s, as the ideal point of entry. And I'm already thinking that, and I'm just waiting for a flush into the 80s for me to get in, because I'm not going to be chasing this at the top, obviously. So keeps making new highs there, and we're waiting for that little dip or flush into the 80s. We're kind of getting that there, but we need to see. Oh, actually, okay. So I'm getting ahead of myself. Really bad entry there. And I'm not taking it off because, bam, this is what I was waiting for. So then I'm adding size there, but I end up, oh, this is okay, terrible. So now I remember. So I end up having a an average of 988 because I added all that size when it did below, but that's because I got ahead of myself on the first one. If I had avoided that when I put all my size at the bottom, I would already be on side here. So anyways, I was offside there for a little bit. And now it's just, look at it, you know? Oh, I took it off. Wow, okay. I took it off because I had a bad entry. That's what it happens. Every time you get a bad entry, then you do shit like that. I think it gives me another entry here. It gives me another little dip into the 80s. I missed the best one. I wasted the best one because I got out. Just really stupid. Um, okay, now I'm chasing here. Okay, I'm getting, okay, it's not that bad. So it did dip here into the high 80s, and I'm getting in 30 contracts in with a worth average here. Now it's an average of 90, but okay, I got my 30 contracts in, and it's still holding there the 80s, and I'm thinking that this one at least I keep it on. So not the best. Um, and now, bam! Just look at that. Just look at the violence of that squeeze. And because of the squeeze was so violent, then I start taking off into that squeeze. Instead of doing that, I should have held all my size, maybe take some off here in the 20s, and then wait because the setup is such a good setup that we know that it has to squeeze more. And I wouldn't have had to wait a long time. Look at it. It's already pushing into the 30s. So I'm still holding their 5 contracts. And this one I did hold it at least up, which push up into the 50s, which makes sense. Had I held my whole, at least half of my position here into the 50s, I would have um, had basically doubled my P&L there. So, anyways, that was a trade. That's it.